Hi, welcome to the Market Alert for Thursday, the 7th of December 2023. So yesterday the US stocks trickled lower after further soft data release, and also stocks fall and dollar gains as eyes turn to NFP and soft ADP from yesterday. And the DAX made new all-time highs, which we'll look at in just a moment. So today we've just got 1:30 p.m. unemployment claims weekly. These are from the US. Tomorrow is the big one, with the non-farm payroll numbers, which will be released at 1:30 tomorrow. That's what the market's waiting for. That's why the dollar's rallying, and I suspect it's going to rally further once those numbers are released tomorrow. But more on that tomorrow when we get closer to it. Okay, let's have a look at the Dow and all of the other markets, and particularly the DAX that made a new all-time high again during yesterday. And in the Dow, we can see the market down yesterday, flat overnight at the moment. So let's have a look in more detail. Market was sideways. ADP numbers came out. Market supported it for a while up to the R2, and then red bars down, and then into the evening you can see further ones. And overnight the market sideways, sitting on yesterday's low and yesterday's close. Needs to close back above this in order to move higher. And again, we're not that far off the all-time highs. It's only a matter of a few hundred points, given that the market's moved just over 4,000. It's no big deal to get to that 36,052, which you could quite easily do tomorrow if the non-farm payroll numbers are better than forecast. In the German DAX, new all-time high yesterday. We sailed through the previous day's all-time high, which I marked up there. You'll see that more clearly in the 30-minute chart, because it was the previous day's high, which is down here. And it just drove and kept going all afternoon, and then blew off, and then the market down. Needs to get back above the DP in order to have an attack on this high to the right, or to yesterday's high that you can see. In the monthly chart, we're through that all-time high of 531, which you can see. So we're in uncharted territory, as they say. We'll just have to see if the market's got the momentum to continue to the upside and create another one. In the S&P 500, it's not really doing a lot, is it? It's stuck in the sideways range. 3 days of red now. 30-minute charts, again, response to the news, and then the realization of the news, and the market down to the low and the close as well. In the FT 100, stuck in a range as well. It's only the DAX that's actually moving and making the all-time highs at the moment. So yeah, FTSE stuck in a range, managing to move up there, and then retracing all the way down to yesterday's low on the overnight, where it's currently found some support. Meanwhile, the greenback continues to move higher. It's trading above and close above the 20-bar moving average. The averages are getting close to crossing as well. So expect further, unless the news is really bad tomorrow with the ADP numbers, but expect further dollar strength and more pressure in the metals markets. And speaking of the metals, silver down again now for 3 straight days. The 200 MA, which is just sitting there, is going to be taken out today. Once they've taken that out, you can see the positive reaction to the news, and then just monkey hammered down and already below the low on the overnight. That 20-bar moving average giving the market some grief. Any movement to the top of this will be sold into, which you're seeing already. Same for gold, struggling but not selling off as much as silver. Silver is the one that gets monkey hammered more than the gold market because of its manipulation, and the powers that be don't want it to rise. There's the gold chart 30-minute. We sold off, we came back with the ADP numbers, and we managed to hold well. And as you can see, we're nowhere near the low. So what does that mean for the gold-silver ratio? It means we're heading back up to that 87 that I've already spoken about many days in the alert. That's where we're heading to, and past that and up to the 90s as well, as they continue to crush the price of silver. And they're going to give it a good hammering if tomorrow, if the non-farm payroll numbers aren't what they want them to be. $20 still being the target. I know it's moved up recently, but they're not going to let it go above 25, 26. They're going to keep hammering it back down in that range. And we can see that if we look at the monthly chart or the weekly chart. So let's have a quick look at that before we finish. So there's your range. It's probably more, there you go. In the monthly chart, you can see exactly what they're up to. We're coming back down to these levels. Last time we managed to hold there, but then we took it out there. So that's the sort of target. Back down to, what's this low here? Yeah, $19, $19.77, below $20. I would expect that to be within the next few weeks, certainly before the end of December, because that's the goal, to keep crushing the price, to make it cheap for solar panels and everything else. Like I said before, how they can get it out of the ground at this price and make a profit is beyond me, because, like I say, it's 50% cheaper than it was in 1979 and 2011. But that's what you can do with derivatives. You can suppress the price as much as you want. The markets are controlled by algorithms now. No open outcry. It's not like it used to be. It's a rigged game. Okay, so have a look at the basic trades for yesterday. So early morning, we see the market selling off there and trading down to the close, where it finds a bit of support, then comes back. Then we start to move higher. Just the one trade today. We have a shakeout down to the close, and then the market is brought back with a potential buy signal. At this point, I didn't trail the stop. I just took the profit off the table because I expected it to retrace and end up in a sideways move, given that it made a new all-time high the day before. When the market does that, you tend to find that it retraces the next day before then moving back to the upside. And you can see how narrow the range should become. And then as we move through the morning, absolutely nothing, really quiet. Then we get to mid-morning, the market, there's the high and the close for reference. The market starts to move on the New York opening of the electronic session. And then that's it. The rest is history, as they say. The market then spiking up. Classic end of rally. This is where you get this parabolic move. You've got the two reds in there, and then the market starts to make its way back down, having completed a second day of new all-time highs. And that's more or less where it ended during yesterday. Okay, that's it for this one. Let's see what the market does today on the limited claimant count, and see if it actually moves, given that there's particularly the Dow and the S&P, as it's waiting for those non-farm payrolls tomorrow. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.